Hi everyone, welcome back. Thank you so much for watching this video and I hope you all are well and staying safe. On today's video, I'm going to talk about how to start investing for beginners. I hope this video will be useful to you all. If you are new here, welcome. My name is Sarita and I do mostly like fashion videos, lifestyle videos, story time, as well as I've started talking about money. If you like that sort of content, then please feel free to subscribe my channel. I'd love to have you here on board. Before I start, I would like to say that I'm not financial advisor. If you are looking for professional advice, then I would suggest you go to professional people. I'm very keen about stock market. I've started investing in stocks since last year, so I thought I'll share my knowledge here. First of all, let's start with what is investment. Basically, it is the process of investing money for profit. You invest your money to get more money out of that money you invested. Also, let's talk about why you should invest. Money loses value every year because of inflation. The inflation goes up 2 to 2.5% every year. For instance, a couple of years ago, with £50, you could get a trolley full of shopping. Today, you don't get that. So that is how inflation affects the value of money. Every year, money loses value. And if you have assets in cash, that's going to lose value over the time. Another reason to start investing is savings rate at the moment is not really great. Currently, the Bank of England base rate is 0.1%. If you are saving £20,000 a year with 0.1%, that would be only £20 a year, which is not great. Instead of that money sitting in the bank and not getting much interest, it would be beneficial for you to invest. Also, another reason why you should invest is financial freedom or retiring early. If you would like to get that financial freedom, then you should definitely invest. So let's talk about what is a stock. Basically, it is a part ownership of the company. If you imagine a big pizza, so one slice of that big pizza is a stock. Let's talk about what sort of stock you should invest in. There are different types of stock. Individual stock, it is an individual stock of a company. You own like individual stock of Tesla and individual stock of Apple. Another one is mutual fund. Basically, mutual fund is pool of public money bought together to buy securities, and this one is professionally managed by an individual who has knowledge and experience about these funds. As a result, they have higher fees. Next one is index fund, which is basket of stock that mimics certain market index. This consists of S&P 500, top 500 US companies, as well as FTSE 100. FTSE 1 is a UK one, which consists of 100 qualifying UK companies. So you can go with index fund. It has like lower fees. It is more diversified, so it has less risk. When I say like diversified, I meant to say there are different companies, so you are not investing in just one individual stock, which means like it is less risky. So S&P 500 includes big companies like Apple, Tesla. So let me read out which companies S&P 500 consists of. So S&P 500 consists of Apple, Microsoft, Amazon, Facebook. So there are quite a lot of companies, 500 big companies that are in here. If you buy index fund, it is very much diversified because there are different company shares. Another one is ETF, which is exchange traded fund, quite similar to mutual fund. One share is buying you basket of different stocks. With this one, you can buy and sell anytime during the day. However, when it comes to mutual fund, they can be only bought at the end of the day when it is priced. So that is the difference between these two. This is where you can invest your money. There are so many options. It all depends on your individual preference and decision. Currently, I'm only investing in shares. So let's talk about shares now. So when it comes to shares, you have to decide which company shares you want to invest in. Another thing about stock market is that nobody can predict the market. Whenever you are buying shares, do your research. Look at their financial results, which are available on the internet. If you Google it, then you can find it. Also, another thing to consider is look at their liabilities. If they have a huge debt, then I would say stay away from those sort of companies. Now let's move on to investment strategy, which you would need. You must be thinking, why do I need this? But you do actually. You have to make a decision if you want to invest long-term or short-term. Long-term meaning you buy the shares and you hold for a long time, like 10, 15 years or 20 years. Whereas the short one is you only hold shares for 3 to 5 years. You need to also have like a financial goal or purpose of why you are investing. For instance, like early retirement, either like buying house. You need to definitely have a goals, and in terms of investment, definitely have strategy. Personally, I'm investing for long term, and my goal or purpose for investment is financial freedom, and I would like to retire early. I don't do short term investment. You can do that as well. If you want to do short term, don't go in loss, always make profit. Basically, if you do it long term, there is more chances that you'll make profit, whereas when you do short term, you kind of like make less profit. For instance, I'll give you an example. If you bought 100 shares and you paid £200 per share, then you would have paid 20,000. Let's say the share you have bought has gone up by another 200. If you decide to sell, then you would get 40,000. So you'll make a profit of 20,000. However, in a couple of months, the share you have already sold goes up by another 200, so you made a loss of 20,000. And so that can happen when you adopt short-term strategy. So it is beneficial to have a long-term strategy. Also, when you buy shares, diversify your portfolio, meaning buy shares from different companies, different industries, rather than from just one industry. Basically, don't put all your eggs in one basket, because that can be very risky. Now let's talk about the big question I get all the time: how much money to invest? Basically, you can invest with whatever money you have got. It doesn't have to be huge amount. You can start with, say, £100, £200, £500. I actually started mine with £500 because I really wanted to test the water first before I invested more money. It can be quite uncomfortable as well as confusing and scary to invest huge amount of money if you are a beginner, and it is fine to invest with small amounts first, and when you feel comfortable then you can invest more. Also, only invest with what you can afford. Don't borrow money, or say don't take out debt to invest. Also, don't invest all the money you have got. Keep aside money for rainy days. You never know what's gonna happen in life and when you would need the money. My advice would be not to invest all the money you got. Keep something aside. So when is the right time to start investing? Basically, there is no right time to start investing. Some people might say like to invest when the market has a dip. Yeah, it is a good time to invest when the shares are quite low, because you can buy more shares with your money. On this matter, what I would say is I don't feel like there is an exact right time to start investing. Basically, the earlier the better. I wish I had started in my 20s, which I didn't. Before you start investing money, clear any debts you have, because the interest rate is going to be very high on debt. Basically, you won't regret investing because your money will be earning more money, and it is a good passive income as well, which is great. Let's talk about the risk. Yes, there is definitely risk involved. Unfortunately, it is not risk-free at all. Nobody can predict the market. Nobody can anticipate the market crash. A lot of factors can affect stocks, like political crisis, economy, and pandemic is one really good example of that. When the pandemic started last year, in between February and April, the S&P 500 fell by 14.9%. You can see there's a big dip here. It has gone up from April onwards. So when it comes to like stocks, if you keep it for long term, you don't tend to lose money. Also, due to pandemic, a lot of us are staying at home, working from home, and we have adopted technology a lot. People were using like Zoom, which became quite popular during pandemic. That went up by 500% last year. A lot of tech companies did really well during this time. Also, after COVID vaccine was announced, the shares have gone up. If you actually look at shares at the moment, it is not too bad. Lots of companies' share has gone up because it has given confidence as well as optimism to market. As a result, the shares have gone up. Also, another thing I want to mention here, which I didn't mention earlier and I should have, but I forgot. Apologies for that. So basically, when the shares value increases a lot and comes to the point that it will be harder for other new people to invest. So what the company does is they split the shares so that the share price will go down and more people will be able to afford to buy the shares. For instance, Apple has split their shares 5 times since they went public. One share was split into 4. That was done last year on August, and it is beneficial to buy shares before the shares are split. For example, if I bought 10 shares and if it is 4-for-1 basis, so that will be 40 shares in total for me after the split, which is not bad at all. Now let's talk about how to get into stock markets and buy shares. It is very easy nowadays to buy shares. Before, it used to be like you have to go to professional person to buy shares. These days you can do it by yourself, which I have done it actually because I'm not investing a huge amount of money. Hence, I'm doing it myself from the comfort of my home. I do it online and I find it it easier to do that way. Basically, you can open brokerage account online and you don't have to pay any fees. I use Trading 212. There are others as well, like Vanguard as well as Hargreaves Lansdowne. I'll put the link down below for you guys. It is very easy to buy and sell. If you're not comfortable, you can go ahead with financial advisor. So when you do it on your own, you can manage your portfolio yourself. There will be like pie of your investment, and that will show you exactly how much money you have invested where. You can easily track like the share price, etc. If you want to wait when the share prices go down, you can also create a lot for that. It shows like how much profit you made, how much dividends you earned. I'm going to talk dividends in a minute. Also on my next video, I'm going to talk about portfolio and maybe show you a little bit of my portfolio as well. Please make sure you guys subscribe this channel. Now I'm going to move on to the last bit. How do you make money from shares? There's two ways to make money from shares. One is dividend, another one is capital gain. Dividend is where the company returns the profit to its shareholders. However, not all the company do dividends. Companies like Apple, Tesla, Amazon, they don't do dividends. Capital gain is where the asset increases, which in return increases the value of shares over time. For instance, if you bought some shares for £800 per share, and in a couple of years, if it goes up to like say 1500, then that is capital gain. So this is basically how you make money out of shares. You make money by selling more than what you bought for initially, which will help you to make profit. Always remember not to sell your shares lower than what you originally paid for. Selling less than the price you bought the shares is one way to lose the money. That is it for today. I hope I have covered everything, and I hope this video was insightful for you all. If you like this video, give thumbs up and share this with other people, as well as subscribe my channel, and I'll see you guys on my next video. Till then, take care, stay safe, see you soon, bye guys.